It is our Mondays with Alfie Tounjian, Advantage Retirement Group. We got to find out what's going on with the markets and more, and even the jobs report. That was really crazy last week that we could probably talk about as well. I don't know, whatever Alfie wants to talk about. Good morning, sir.
Hey, good morning, Drew. How you doing this morning?
I'm okay. So what about that? I mentioned it earlier. I was kind of surprised to find out not only with the jobs report how all the numbers have been revised down, right? April's and May's, but also the fact that there was 76%, I think, of the jobs created were government jobs. That can't be good.
That's not good. No, you want private sector jobs, and government jobs is not good. That's just funding the debt more. So, and what did President Bush always call it? Fuzzy math, and that's what we have. We have fuzzy math going on, and the jobs report comes out, and that's not good. Wall Street doesn't like that. Wall Street doesn't like fudging numbers like that, because you're going to get a rally or you're going to get a decline based on the first one that comes out, and then the second revised comes out, and that's not good. It's just not a good precedent to keep doing that, and they do it a lot this administration.
Yeah, no doubt. Yeah, not good. So what are the charts out there in the market saying? Like, what's the latest? What are you hearing?
So there's a lot of economists and fund managers. They use charts to chart to see what the history did and what they anticipate what the future is going to bring in the market, and the charts are reading good still. It's still a buy. There's something called a VIX, which is a volatility controlled index, and that's looking good. So it's a buy, based on the VIX. So even though the market is high, it's at all-time high. You have all the indexes are just look at the Dow right now. It's almost 40,000 points. And then you have NASDAQ up there. Then you have the S&P up there. So even though they're very high, it is a good, the charts are indicating that it's still room to run. So that's good. And again, we have election year. Election years are usually pretty good for the market. So far, so good.
So far, so good. So yeah, we will see what's. Yeah. Although it's interesting how the markets are reacting right now, or the lack of reaction, with all the doubts that are happening within the party for the Democrats and with Joe Biden's health. Does it seem unusual to you? Does that seem odd?
Yeah.
Like, it's weird. Like, you would imagine it would be, the markets would be more volatile with all the things that are going on right now, unless the market predicts that Trump's going to win and they're just anticipating it, and that's it.
Well, right now, remember, before that debate, it was 50-50. You didn't know who was going to win. There was no really clear cut who was going to win, even though Trump was winning in a lot of the states that, but now it looks like a clear cut that either Biden's not going to be there. It looks like he's not going to be there. The more we look at it, the more it looks like he is not going to be there. So the markets are putting their money on Trump. And when they put their money on Trump, they're going to look at different things also. They're going to look at the rate cuts. They're going to look at rate cuts. They're going to look at energy, because energy is going to go. We're going to start producing again. There's a lot of positive things that can come in the market. I feel that the market is pricing in a Trump win.
Yeah, it has to be. It just has to be. I mean, I can't. It just feels odd that it would not be volatile due to the political environment that we're in right now. And the only reason it seems like it would be that case is because they're feeling good about the future. I guess.
Yeah. No, I think it is.
How about inflation numbers? Where are we at there, Alfie?
Yeah, we have some inflation numbers that's coming out this Thursday, and then you're going to have some earnings, corporate earnings coming out. Treasuries are going to, have their auction this week, so that's where people can bid on treasuries if that's what they want to do. That's a good. It's a short term for treasuries. You buy them for the short term, or you buy them for 10 years. They're either usually I was reading where what's better, a treasury or a CD? I'm not a big CD guy anyway, but CDs would be better for if you're looking for like a 2 to 5 year hold. Treasuries would be better for shorter than that or longer than 5 years. But yeah, so there's a lot happening this week, and my tip of the week, I would have to say, is that you have you're going to have Biden might be forced out this week. It could be this week, it could be next week, but the Democrats are doing everything they can to force him out. But if he doesn't want to go, Drew, you know this more than me, he doesn't have to go, right? He has all the delegates.
He can stay, and then it begs the question, who's running the show, and how long do they want to continue to do this when you have so many people that are talking against him right now. But yeah, he doesn't have to go anywhere. And I'm going to bring up something that a website was talking about, this Blitz primary. That's pretty interesting. But again, as we look at the political climate, we see what's going on here. We see the inflation numbers, what they'll be like later on in the week. We see some of what happened last week with the jobs report and how they're revising all these numbers down. It's still remarkable to me that the markets are so resilient the way they are, considering what feels like it should be a more volatile marketplace. But
if you look at the market, it's been a very calming market this year. We haven't really had we had one hiccup where it was starting to go down. Now remember, September is when that market typically goes down. The summer months towards the end, people take those vacations. So, but I was going to say on the tip, don't panic if Trump does. If Biden steps down or gets forced out. Well, you're going to see some volatility at that point. You're going to see some volatility, but then it's going to recover. I feel, my opinion, that it will recover. So don't do anything drastic, excuse me, with your holdings right now, because it is. I think it's going to be a solid second half of the year.
All right, we'll see how it goes. And I know, Alfie, you mentioned CDs. Do we get toasters with that too?
Blenders and toasters.
Blenders and toasters with CDs? Come on now.
Now your young listeners, they don't know what we're talking about, but the seasoned, like Rush Limbaugh would say, the seasoned citizens, they know exactly what we're talking about.
Back in the day, you get a CD, you go to the bank, you'd ask for a CD, and to be competitive, they'd give you free stuff. The good old days.
Yeah, absolutely.
Well, listen, you guys take care, and thanks for having me on, and have a fantastic week, everybody. Bless you.
All right, Alfie Tounjian, Advantage Retirement Group. All right, my friend, I appreciate you. And keeping an eye on the markets.